Greetings, members one and all of the Salivation Nation. The metals markets are moving up pretty steadily for almost all metals, and there's some reasons why it's happening for what we would consider normal circumstances, normal market movers, but there is another threat that is taking place that is spooking the markets, and that is the new coronavirus that is starting to make the news as of late. There's 3 confirmed cases here in the United States, and it is really moving markets. This is not the type of virus that you get from sipping on your friend's Mexican beer with a lime attached to it. No, this is something far more serious that has really kind of spooked the markets, and we're seeing gold and silver and platinum move up a bit here. So let's explore. Yes, indeed. Before we find out what's going on, there was an article here earlier in the day how gold prices are higher after mixed IHS market PMI data. And I think this is a little interesting tidbit as to some of the reasons why the prices went up before really this coronavirus started really making more news when we found out about a second and now a third case of this virus that has made its way across the shores from Asia over here to the United States. Gold prices were modestly higher Friday after IHS Markit reported that its Manufacturing Purchasing Managers Index fell this month, while the service sector one climbed, leaving the composite index at a 10-month high. And we're looking to see what is this IHS Markit. It's a company that brings together intelligence across the widest set of capital-intensive industries and markets. It connects data across variables. Their analysts and industry specialists present customers with a richly, highly integrated view of the world. And so it's this way of kind of bringing the information together about with business in different sectors. In fact, they have all these different industries, including academic, education, aerospace, agricultural, retail, technology, manufacturing, maritime and trade, life sciences, all kinds of different sectors, including governments and NGOs and chemical and automotive. So I think that's quite interesting to see that I've never heard of this company before, how they've done that. I'm sure it's been mentioned prior times for economic data indicators. But research from IHS Markit said its flash U.S. manufacturing PMI for January decreased to a reading of 51.7, which is a 3-month low from December's reading of 52.4. Meanwhile, the firm's service sector PMI reading climbed to a reading of 53.2, a 10-month high from the December reading of 52.8. Expectations have been for both to be near last month's levels. The composite index reading was a 10-month high of 53.1 compared to 52.5. U.S. private sector firms indicated a faster expansion of business activity in January, and the pace of growth accelerating to a 10-month high, the report said. The upturn was driven by a sharper increase in a service sector output. A monthly reading above 50 points to an expanding sector, while anything below shows a contraction in activity. So we're still in an expansion, and keep in mind, and more than likely this news, it was reported on this morning, probably would have had a very negligible impact. In fact, the psychological level is as well, hey, it's still above, and we'll see what the next couple of months bring, because we have trade deals that have been signed, at least phase 1 of the Sino-American trade deal and then USMCA. So once these trade agreements start to become implemented, it should fare better for economic numbers as such. But nonetheless, now we have another indicator here, and that is the coronavirus. And so this is now starting to spread, and it's being concerning, and especially now here with the precious metal markets. Gold is well supported and has room to run higher next week as analysts point to the Federal Reserve meeting and the spread of the new coronavirus as the two key issues to keep an eye on. So they're nervous. The yellow metal battled against risk-on sentiment this week, but managed to hold above $1,550 an ounce level and even rise about 0.8% on the week. February COMEX gold futures were last trading at $1,572.40 and up 0.45% on the day. It's actually up higher than that now, gold is. Next week, analysts are keeping a close eye on the Federal Reserve interest rate decision on Wednesday, the spread of the new coronavirus, and the possibility of any new geopolitical tensions. The U.S. Central Bank meeting, which will be followed by the Fed Chair Jerome Powell's press conference, is the main event to watch next week. However, they don't really expect anything to change. They'll keep the rates on hold, typically. But the other thing, too, is something to note. Because of the speculative nature of the markets, the Federal Reserve has decided that he would always have a press conference after every meeting, no matter what. The consensus is that the U.S. Central Bank will keep rates on hold. The CME Fed Watch tool is showing an 87.3% chance of rates staying at current levels and a 12.3% chance of a 25 basis point rate hike. Some analysts see the Fed leaning towards the dovish side in his statement or during Powell's press conference. If anything, the Fed is going to quell any lingering fears that it might be looking to take back its insurance cuts anytime soon. And instead, it is probably going to reinforce the market's lean on the dovish side. The market still has some cuts priced in for 2020 that should be supportive for gold prices, Ghali told Kitco News on Friday. TD Securities projects for the Fed to remain on hold for most of the year and then cut rates once by year's end. Not all, however, see the Fed meeting as a major event next week, noting that it might turn into a non-event as the market's attention shifts to the spread of the coronavirus. And that's just it. That's psychology really 101, especially in terms of the news cycle. We've heard about the sort of these instantaneous news bits and how you can get your 15 minutes of fame. Well, now it's down to 15 seconds and people forget about it and move on to the next thing. There are a lot of data releases next week as well, which are likely to take a back seat to new virus news headlines, Clancy added. We don't have any special insight into how the virus is going to spread. The only thing we can do is go back and see what previous outbreaks of viruses played out in the past. The most obvious one you can draw parallels from is the outbreak of SARS back in 2003. If there is a similar run of play as back then, we will probably see a lot of the moves reversed as the virus is brought into control. On Friday, the U.S. Centers for Disease Control Prevention confirmed a second U.S. case of the new coronavirus in Chicago. The CDC added that it is investigating another possible 63 cases as a sometimes deadly virus is spreading into the U.S. I think there's been a third confirmed now as of the recording of this video. Gold has benefited from the virus fears due to the risk-off sentiment that the outbreak created. I wonder what happened the days after the SARS outbreak in 2003. Different news cycle back then, though, and probably different circumstance. And the past performance is not always an indicator of current or future conditions or for future performance. It is the impact of the gold price, even if it's only temporary. It has already been a pretty strong factor supporting the gold price in the hours that we've seen some of this news break. It promoted a risk-off move in markets, which normally is very beneficial for gold. And if things get worse from here, there is no reason to suspect that we wouldn't see the same thing happening again. Until we hear of any sort of concrete evidence that the virus has been contained, it will probably be one of the main drivers. Clancy is also watching geopolitical risk, which are still lingering in the background and could potentially boost gold once again soon. And if you get two of those factors at the same time making headlines, well, yeah, watch out. We could see $1,600 gold again pretty soon. One of the most surprising things this week has been the lack of reaction in the oil markets to the events in Libya and Iraq. Those factors could be positive for the gold price. The The Chinese markets are closed for the new Lunar New Year celebrations and will not reopen until late next week. Chinese markets are now closed. Technically, it is a week, but it will take longer to get back in the full swing. Made everything quieter, said Ron O'Connell, which is FC Stone's head of market analysis for EMEA and Asia regions. The preparations for the Lunar New Year have not boosted gold demand by much, said O'Connell. With the rest of the physical market quiet, gold is holding up pretty well. Any upward momentum has got to be generated by the professional market, she noted. There's a stark difference between the physical demand can do for gold prices versus increased professional market participation. She highlighted upward momentum in prices does tend to always come from the professional market, she said, pointing to a lot of interest in gold during the U.S. market hours. The nature of the two different sides of the system is that physical demand and the retail level is never capable of driving prices higher. That is an interesting thing, how that is. And this is probably one case for, looks like manipulation one way or the other. What it can do is cushion weakness. At the moment, there is a good bargain hunting coming from, between 1550 and 1555. That seems to be almost exclusively concentrated in the U.S. hours, which points to people continuing to look at all different professional parameters as opposed to underlying physical. Analysts are watching potential close above 1568 an ounce, which is looking very probable as of Friday afternoon. It's actually now well above that. A close above that level would indicate that gold might be ready for another rally, said Ghali. On the upside, we are watching 1568. A close north of there would imply that gold has resumed its upward trajectory. On the downside, we're looking at 1550 support. O'Connor said she is neutral on prices in the short term, watching a tight range of 1550 to 1570 an ounce. So, some important macro research releases next week, aside from the Fed interest rate announcement, including U.S. housing data. New home sales are out on Monday, and pending home sales are out on Wednesday. The previous numbers for housing looked good. The U.S. durable goods report and the CB consumer confidence is scheduled for Tuesday, followed by fourth quarter GDP numbers and jobless claims on Thursday. The PCE price index and personal spending are out on Friday. In addition, the Bank of England will also be making its interest rate announcement on Thursday, which will mark Mark Carney's, the governor, last monetary policy meeting. He's the governor of the Bank of England. And the market consensus is projecting that for the central bank to remain on hold and keep rates at 0.75% there. Now, what's the sentiment on Wall Street and Main Street? It's struggling to find momentum as it treads water above a critically important technical area. The sentiment in the marketplace is still significantly bullish among Main Street investors and Wall Street analysts here. In this article, again from Kitco, and with the kind of coronavirus threat growing, and this is a polling that was taken, and this you can see just very briefly here. We can see that a pretty good majority of folks are bullish on gold prices on Wall Street, and even more so on Main Street. And but the Wall Street numbers are probably the ones to watch. That means that they're seeing it there and they're understanding it. A lot of people on Wall Street, they'd rather put their money in other things that can actually make them money, whereas gold is something that you put your money in to preserve your wealth and to protect yourselves against economic instability, which means that when everything is fine, prices tend to go down. But there you have it. Very interesting indeed, from all levels there. And so we'll see how things play out. My prayers are with those who have contracted this virus, both overseas and here domestically, and that it will not spread anymore, and they're able to contain it. And but it just goes to show you all the different factors that come into play in the markets for the prices for gold and silver and what they can have an effect on them. And they're bullish right now. Gold, silver, platinum up. Palladium is the only one that's down of those four metals there. And we'll see how this plays out. By the way, I should make a little note here that silver is outperforming gold with this news here. That's fascinating indeed to see that. I would not have expected that as of the what we've seen recently in the markets with silver kind kind of being lackluster in performance compared to gold. And there you have it. Post your thoughts below. Remind you I post videos on a daily basis. Want to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.